Do you want to know what the biggest thief of your retirement is? It's not the stock market. It's not even your own spending habits. It is the Uncle Sam taxman, and if you aren't careful, he's going to take a massive bite out of everything you have worked so hard to save. Listen to me, taxes in retirement are a whole different beast. When you were working, you knew exactly what was coming out of your paycheck. But now you're dealing with required minimum distributions, Social Security taxation, and Medicare surcharges that can skyrocket just because you withdrew a few extra dollars from your IRA. Are you kidding me? You cannot afford to be powerless here. You must be a warrior when it comes to your money. Many of you are sitting on what I call a tax bomb. You have all your money in traditional IRAs or 401(k)s. You think you're rich because the balance looks big, but a third of that money isn't yours. It belongs to the government. And the second you turn 73 or 75, the IRS is going to force you to take that money out and pay taxes on it at ordinary income rates. If you don't have a plan, that wealth is going to evaporate faster than you can imagine. So, how do we fix this? How do we take the power back? We start with the Roth conversion. This is one of the most powerful moves you can make, especially in 2026. If you are in that gap window, where you've retired but haven't started Social Security or RMDs yet, your income is likely the lowest it will ever be. Use that. Convert a portion of your traditional IRA to a Roth IRA. Yes, you will pay taxes now, but you pay them at today's known rates to eliminate the tax forever on all future growth. Imagine being 85 years old, needing $50,000 for a medical emergency, and being able to take it out of your Roth without owing a single penny in tax. That is freedom. But you have to be smart. Don't just convert everything at once and push yourself into a higher bracket. You fill up your current tax bracket, maybe the 12% or 22% bracket, and you stop right there. You do it year after year. This is called a Roth ladder, and it is how you systematically disarm that tax bomb. And what about your Social Security? Did you know that up to 85% of your benefits can be taxed? It's outrageous, but it's the law. However, if you manage your other income sources correctly, like using Roth withdrawals which don't count toward the provisional income formula, you can actually reduce or even eliminate the tax on your Social Security. You have to look at your income as a puzzle. Which piece do you pull first? I want you to consider the bucket strategy. You should have money in 3 places: taxable, like a brokerage account, tax-deferred, your traditional IRA, and tax-free, your Roth. When you need money, you don't just grab from one. You blend them to keep your taxable income below the thresholds that trigger higher Medicare premiums, known as IRMA. If you go just $1 over those IRMA cliffs, your monthly Medicare bill can jump by hundreds of dollars. Why would you give that money away for no reason? For those of you who are charitably inclined, please stop writing checks from your bank account. If you are over 70 and a half, use a Qualified Charitable Distribution, QCD. You can send up to $111,000 directly from your IRA to a charity. That money counts toward your RMD, but it never shows up on your tax return as income. It's the ultimate win-win. You help because you love, and you keep your adjusted gross income low. Listen to me, your goal in retirement is to be safe. To be secure. But you cannot be secure if you are losing 25% or 30% of your purchasing power to avoidable taxes. You have to stop being afraid of the math and start taking action. Go through your accounts today. Look at where your money is parked. If it's all in tax-deferred accounts, you are at risk. Start your conversions, time your Social Security, and use those QCDs. Do not let the government be the primary beneficiary of your life's work. You worked for this money, now make sure it stays in your pocket where it belongs. With that said, thanks for watching, and until next time.